Hello and welcome to this little market update which I've put together for Switzer Daily. Interestingly, I did one last week and a whole lot of people were really cheesed off that they didn't get the full TV show, which nowadays is behind the paywall that people who subscribe to the Switzer Report gets. But I do want to do a quick update about what's going on right now and have a look at a number of stocks that are quite interesting at this point in time. Now quickly, on screen I've got a number of interesting companies. And the first three, CSL, ResMed and Macquarie, would have to be regarded as top quality stocks where the share price has fallen pretty substantially because of all the negativity around in the stock market right now. The table actually shows you that CSL, 42% is the consensus call of where the share price might go. And the biggest one is 46.47%. In fact, I've noticed that about 5 or 6 of the analysts have a rise of around 40% for CSL. Quality company, market has really hit it really hard. I like it when quality companies cop it from the market. They're the ones I really want to invest in. ResMed's a similar one. ResMed is a company that works in the sleep apnea space. And both CSL and ResMed have suffered because of this magical drug allegedly going to make Americans thin. But it's a very expensive drug and I think it's a sort of a short-term reaction. And a company like ResMed, as you can see, the consensus rise there is 47%. And one really optimistic forecast, I think, is 84%. Macquarie is the final third quality company I want to talk about. There the consensus rise is 18.6%. One analyst thinks 30.5%. Now I want you to have a look at the chart that's coming on screen now. And these are Macquarie, CSL and ResMed. And you can see the nature of this chart. These companies have done spectacularly well over time. They are quality companies. It's not a surprise that their charts are very similar. And if the market wants to sell them off, that's when I'm interested in buying those sorts of companies. Let's go to the table again. And you've got Treasury Wine Estates. This is a company that's now going to benefit from China taking away the tariffs. It's not a top quality company. It's a good company that doesn't fit the bill of CSL, ResMed or Macquarie. Interesting company, probably has upside. Next two is PLS, that's Pilbara Minerals, and Liontown. Both lithium plays, been smashed lately. Lithium is a commodity of the future. It's going to be all in the batteries of electric vehicles. The market got too excited, share prices went too high. Liontown suffered a takeover type play from Gina Rinehart where she bought 19.9% of the company. And the American company, Albemarle, who wanted to buy Liontown at offered $3, they pulled out, so the share price has fallen to $1.60. Probably a buying opportunity if you've got yourself a year or two to wait, but it's a speculative one. I want to compare these, the top three, which are quality companies, market has hit them very hard, good reason to want to buy them and hold them over time. The other ones are like going to the races and betting on long shots. They're good quality long shots, but they're not likely to deliver as quickly or as reliably, more importantly, as CSL, ResMed and Macquarie. Tyro is a company that's been hit by the rise of payments companies that became rivals to it. It's a tech company as well, and tech companies have been smashed. You can see there the consensus rise is 111%. The biggest and most optimistic view is 132.56% higher. Interesting company. It's for the punters. It's for the speculators. It's not a bad company, but really it doesn't compare to CSL, ResMed or Macquarie. And finally, Calix, CXL, not a company I follow. It's one that I know Adam Dawes talked about and quite likes. Interesting company, real speculator. You can see the consensus rise 183% and the biggest rise is 234%. This is punting, it's not investing. Buying CSL, ResMed and Macquarie, I think it's blue chip investing. TWE, not a bad company, still investing. PLS and LTR, I think they're companies that will do well in the future, but it's more in the speculation and punting space than it is when you buy top quality blue chip companies. That's my summary of what's going on right now. I do think the market will rally towards the end of this year, and 2024 will be a much better year. And one final point, if you want a more in-depth analysis of why you might want to buy these sorts of companies, you are going to have to become a subscriber to the Switzer Report. So go to switzerreport.com.au. Thanks for joining me. See you later.